Hey guys, wanted to go over the Fed meeting tomorrow and the implications of the incoming rate decision. Now, looking at the target rate probabilities on the CME FedWatch tool, we have essentially almost 100% chance of at least a 25 basis point hike. So the odds are 96.1%, and the odds for a 50 basis point hike are like 3.9%. So Uh, looks like a 50 basis point hike is highly unlikely. It is pretty much priced in that we're going to get a 25 basis point hike. Now, I've been speaking to some other traders, and I think a lot agree that it's probably going to be a sell the news event, which it might be. But I think a lot is going to depend on what the what the following Fed meetings probabilities are going to look like tomorrow after Powell finishes his speech, because I think the most of the volatility isn't going to be at 2 p.m., but it's going to start at 2:30 p.m. when Powell actually starts speaking. So I think it's a lot is going to depend on how dovish or even I guess hawkish he is on further rate cuts. So like I said, the next meeting is going to be the next meeting after tomorrow's meeting is going to be on the 29th of October. And right now, the market is actually pricing in it's let's call it 3/4% chance of another 25 basis point hike in October. So basically, from now until the end of October, we could be looking at basically a 76.8% chance of a 50 basis point cut in the next two cycles or the next two Fed meetings. Um, However, these odds can change, so that's what I'm be looking out for. Ideally, we would want the odds of like another 25 basis point hike to increase to another few percentage points. And basically, what I'm looking for in his tone is a more dovish tone or a stronger likelihood that he will indeed cut rates another 25 basis points in late October. Because basically, there's a 1 in 5 chance right now, 20% chance that there will only be one rate cut till the end of October. And then there's a 3.1% chance that there's going to be 75 basis point hike. So basically, I guess that depends whether in the unlikely scenario that he cuts rates by 50%. I mean, not 50%, but 50 basis points tomorrow, then I guess the odds of this will increase a lot. So yeah, that's what I would watch out for. Basically listen to his tone, and if he's more dovish, then theoretically we should see these two, the the 350 to 375 basis point column increase, or at least one of these two to increase, and for this one to decrease. So we want higher odds of at least another cut in October, and perhaps even higher odds of a 50 basis point cut in October as well. And then we can even take a look at December. So for December, I guess the most likely scenario is that there's going to be yet another 25. So I guess the market is pricing in a 25 basis point hike tomorrow, 25 basis point cut in late October, and another one at the end of the year of 25 basis points, in December. So right now there's a 71% chance of this happening, and about a 1 in 4 chance of of just a 50 basis point 50 basis point cut over the next three Fed meetings. So yeah, ideally we'd want to see the odds of this to go up, and even the odds of, I guess this would be almost a full point, 1 percentage point of 1 percentage point cut in the Fed funds rate, and the odds of that are 3% right now. So if this one increases, then I think it won't be a sell the news event. I think this will be, I think the market will pump even further, or we'll continue the rally that we've seen in crypto. Even though like the past 2 days have seen a bit of a dip, or at least Monday was a decent dip. So that's what I'm looking at. The other thing, I know we have some open positions right now. So I think I'm gonna actually get out of the Pepe Pepe short. The criteria for entering this one was it breaking below the 21 EMA on the 8 hour. Now, if you were able to grab this one closer to the moving average, I think my entry zone was from like 0.109 cents and below. So I'll just take the loss in this one because yeah, there's not any more momentum to the downside here. So I probably was a bit too early to jump on this one. Whoops, I forgot to share my screen. So yeah, here's the Pepe chart. It's breaking above the 21 EMA. So I would start to exit this one. Um, yeah, but I would just exit this before it's stop loss and take the out on this one. Now the other position is ENA. So for this one, yeah, this one is still good. Actually, it's in a slight amount of profit, not much, but yeah, we were down only 0.5% yesterday, and I entered this trade on Monday. So yeah, this one is looking good, and then the other one was the Ace long setup, which is also in play. Oops, I just typed in Ace long. Yeah, Ace is still looking good. The criteria for this was it bouncing above the 200-day simple moving average, which is still above. Yeah, so we're still above the 200 simple. So as long as that remains above here, above like call it 59 cents, then I'll keep this one as a swing long to the upside. Also, if you notice, there's some good confluence here with um, yeah, it's like a good support area or a good order block where a lot of volume took place. So yeah, I like this spot for a bounce, especially since it did have a pretty crazy run up, like went up 60%. Now it's pulling back. So usually when we get like an extended move and see a pullback to the 200-day at first pass, we do get um, at least a relief rally in such scenarios. So yeah, that's the update. Just be careful tomorrow. Don't I wouldn't enter any like short-term trades right before the meeting or right before Powell's speech. So just be aware of that. And yeah, I think that's pretty much all I wanted to say. So I'll see you guys in